This isn't a story about millions. It's not a Wall Street fairy tale. These are my rules, rules that built fortunes, rules that buried the arrogant, rules that protect your capital and sharpen your edge, if you're wise enough to follow them. I didn't guess. I never trusted luck. I watched. I waited. And when the time was right, I struck hard. Most traders lose because they want action. They confuse movement with progress. They gamble. I didn't gamble. I operated. And now I'm giving you the same rules I lived by, so you don't have to learn the hard way like I did. Follow my rules or lose everything. Before we begin, subscribe now, like this video, and leave a comment. That simple action helps more people see this content and tells me these lessons still matter. Now listen closely, because these rules were written in blood, my own.
There is only one side of the market, not the bull side or the bear side, but the right side. And the market is never wrong, ever. You are. The sooner you accept that, the sooner you stop trying to outsmart something that doesn't even know your name. In my early years, I made one of the worst mistakes a trader can make. I tried to predict the market. I had logic, I had confidence, but the market doesn't care about your confidence. I watched a stock push upward. Strength, volume, momentum, everything was there. But I thought it had gone too far, so I shorted it. I bet against the trend. The trend didn't care. The stock kept rising, and I lost badly. That lesson burned itself into my mind. The market doesn't punish you because it's cruel. It punishes you because you refuse to listen. From that day on, I stopped fighting the tape. I reacted to what was happening, not what I thought should happen. Never try to prove the market wrong. You will only bankrupt yourself trying.
It sounds simple, but this rule will make or break your career. It wasn't my thinking that made the big money. It was my setting. I didn't buy stocks because they were cheap. I didn't buy them because I liked them. I bought them because they were moving up. Momentum isn't random. When a stock rises on volume, that's a signal. Someone knows something. Money is flowing in. Most traders try to catch bottoms, hunt discounts, or act like heroes. Cheap stocks are cheap because nobody wants them. My biggest trades were on stocks already climbing. Railroads, steel, oil. The public called them overbought. I called them winners. When a stock breaks to new highs with conviction, that's not the time to hesitate, it's the time to act. And if a stock is falling, don't try to guess where it might bounce. Don't predict, react. Ride the wave. Don't try to start your own. The trend is your ally until you think you're smarter than it. Then it becomes your executioner.
There's no room for hope in trading. Hope is not a strategy. Confirmation is. I never bought because it felt like the right time. I waited for the market to show me it was. Most traders lose because they want to do something, anything. Trading isn't about activity. It's about precision. I studied the tape. I watched price action until pivotal points appeared. Moments when the market showed real intent. Not noise, not emotion, real conviction. Sometimes I waited hours, sometimes days. But when that moment came, when price broke a level with strength and volume, that's when I entered, never a second before. Enter early, you gamble. Enter late, you chase. Enter with confirmation. You gain an edge.
I never went all in. Only fools do that. Position sizing isn't just risk management, it's strategy. I built positions as they proved themselves. If the stock moved in my favor, I added. If it didn't, I cut. You do not double down on a loser. You add to a winner. If I planned to buy 3,000 shares, I started with 1,000. If the stock held and advanced, I added another 1,000. Only if it kept confirming strength did I buy the last 1,000. The market paid me to increase risk, not emotion. Too many traders blow up by betting everything on their first move. Your position should never be bigger than your discipline.
Anyone can enter a trade, but only the disciplined know when to exit. In 1907, I made my first real fortune, not because I predicted the top, but because I knew when to get out. While others held and hoped, I sold. You don't need to be perfect. You just need to preserve profit and protect capital. Most traders fail because they let winners turn into losers. They let hope replace discipline. I never married a trade. If the market turned, I turned with it. Trading isn't about how high it goes, it's about what you walk away with. A trade isn't complete until you close it on your terms.
The worst losses of my life came from listening to others. Brokers, friends, newspapers. They all had opinions, smart-sounding ones, but those opinions weren't based on price. They were based on ego, emotion, noise. I once ignored the tape because someone gave me inside information. I held when I should have sold. I waited when I should have acted. And I paid the price. That was the last time I let someone else's voice drown out the market. The tape doesn't lie. People do. If you can't trust your own analysis, you have no business trading.
Trading isn't emotional, but traders are. Fear, greed, ego, these destroy accounts faster than any crash. I've chased trades I shouldn't have, hesitated on trades I should have taken, and paid dearly for both. Emotion clouds judgment. It whispers lies. You must build habits, rules, rituals, things you follow no matter how you feel. Stops mean stops. Signals mean action, no hesitation. Discipline is what transforms gamblers into operators.
The real money is made in the waiting, not trading. Waiting. Some of my biggest trades came from sitting still while the trend worked in my favor. Most traders destroy profits by overmanaging, closing early, chasing new ideas, trying to feel busy. Doing nothing is hard, but it pays more than talent. Your job isn't to outthink the trend. Your job is to hold.
Losses are tuition. If you don't learn, you paid for nothing. Every time I lost money, it was because I broke my own rules, ignored stops, let pride speak louder than price. I didn't blame the market. I studied my mistakes and rebuilt sharper. Traders stay broke because they protect their ego instead of their capital. Don't justify losses. Dissect them.
If you remember one thing, remember this. Success in trading comes from structure, from discipline, from rules. I didn't rely on luck or intuition. I built a system. Entry rules, exit rules, size rules, sitting rules, loss rules. Amateurs say, I had a feeling. Professionals say, I followed my plan. Consistency, not brilliance, builds empires. If your strategy can't survive your emotions, your drawdowns, or your mistakes, it's not a strategy, it's a bet. I came back from losing everything because I had rules. I had structure. I didn't let failure be final. Stop guessing. Start building. Build a system. Stick to it. Respect it. You don't need luck. You need discipline, control, and rules. Follow my rules or lose everything. If these words hit you, you're not here by accident. Subscribe now, like this video, and leave a comment. That small action helps more people find this content and tells me the work still matters.